Hello, everyone. This is Dr. Duru from Ahan Analytics with the market breadth. All right, so today's edition is called the 200-day moving average or the 200 DMA cliffhanger at resistance, and you'll see why in a second. So before we get started, just as a reminder, if you have any questions, you could put them down in the comments. I appreciate any feedback, likes, and shares so the algorithm knows what's up. And of course, you can subscribe and hit the bell so you can get notified on the next videos I record. All right. So we are time stamping this. It is May 9th aftermarket. You're seeing some of the big headlines right now. This is, of course, a really big one. This is a follow-up to the Fed meeting, which was the big, really event of the week. Basically, the word that Powell did not say that was just hanging in the air was stagflation. And that's what this headline is about here. We've seen tariff headlines with the Chinese and the US delegations talking this weekend. And, there's going to be just constant changes, twists and turns here. But it's interesting to note that the market is no longer reacting to these. So, as I said in another video, it's interesting to see how muted the market's response is now to these constant tariff headlines. So now we've gone from a period of tariff trauma and drama and economic chaos to kind of just shrugging of the shoulders. All right, so there are a bunch of other, of course, great stories here. Google really got slammed today with basically Google got slammed. Oh, here it is by Apple of all things about the replacing of their search share with AI. All right, so let's keep it moving. Next up, I want to show. So we've had a swath of earnings the last several weeks. This chart comes from FactSet. I found this very fascinating. It tells you what is on the minds of executives and how they're presenting their earnings. And given the changes here, the dramatic changes in sentiment in terms of the words used, I'm really surprised that the market did so well during earnings. But again, this is another proof point that sentiment has completely turned 180 on what's going on, and the market is collectively just shrugging its shoulders now. So look at this. This is FactSet's analysis of topics mentioned, the times that topics were mentioned in earnings calls, and comparing it from Q4, which is the light blue, to Q1, which is this past quarter, earnings quarter, which is the dark blue. We went from 53% all the way to 93%. So basically, almost every S&P 500 company mentioned tariffs. And here we have uncertainty. Again, almost every company talked about uncertainty, probably economic uncertainty compared to 38% in the previous quarter. And now you can see the mentions of recession creeping higher. Now, of course, when the percentages are this low, you have to be careful because analysts, even if the company executives don't say the word recession, analysts may bring up recession, and then that forces the executives to talk about it. But regardless, this map tells you that people are increasingly wary and nervous in these earnings calls, and yet the market has chosen to become more confident. So this is an interesting divergence to keep in mind as we go through and look at the market events of the week. Okay, so this is the S&P 500. Let me make sure I have logarithmic scale. Okay. And this is what I mean by this is the 200-day moving average cliffhanger at resistance. So this blue line is the 200-day moving average. I'm looking at the S&P 500, and you can see essentially today, Friday, the market closed right where it started on Monday, right where it opened on Monday. So essentially a flat line week. Friday's close made it look like the market was prepared to just zip right through that resistance area. So it's very instructive that the buyers did not find enough energy to push up, but also the sellers lacked complete enthusiasm as well. You could say their best chances were on Tuesday and then again on Wednesday post Fed that the lows came close to 50-day moving average support, but they couldn't push through. I mean, the sellers are pretty much non-existent in the market right now. So I think the narrative and the story is really all about what do the buyers want to do. So right now the buyers are maybe they are taking cues from earnings and looking up at this resistance very warily about trying to push through. So the NASDAQ, similar thing, trapped in the middle of the 50-day moving average and the 200-day moving average. It's almost like a carbon copy. I don't need to say more about that, except that the NASDAQ, unlike the S&P 500, is a little further below that last peak. So it has double trouble that it's trying to break through. The big story of the indices for me was IWM, the iShares Russell 2000 ETF. I drew in a purple line here to show this ever so subtle uptrend since the lows of the tariff drama and trauma. And finally, the last week, IWM broke out above the 50-day moving average, and I said this turned me from a uninterested observer to a very interested observer. My two trades on IWM worked out very well. My typical strategy is to buy dips in IWM with call options and then to sell the next pop. And so I got that next pop on Thursday, which was really nice, almost 2% gain for the IWM, and even of course much bigger gains for my call options. I'm not going into the weekend with call options, but I will buy them on any dips to this trend line and to the 50-day moving average. Okay, now we have the VIX, which has steadily uh, gone down. You can see the blasé nature of the trading. So even though the market just sort of churned, the VIX set a new low. It is now finally completely reversed and closed its gains from the announcement of the reciprocal tariffs back on April 3rd. So we are basically, I mean, it's still elevated because the VIX is above 20%, but given this steady downtrend, just consider the market to be relatively complacent, given this pattern. Okay, let's take a look at the my favorite technical indicator, which is the percentage of stocks trading above their 50-day moving averages. I was wondering whether the percentage of stocks trading above their 50-day moving averages, I like to call it AT50 or above the 50, was going to have a rendezvous with the overbought threshold, which is at 70%, at the same time that the NASDAQ and or the S&P 500 tested the 200-day moving average. Now, given what the IWM is doing, it looks like we could be on schedule for that. As long as the S&P 500 and NASDAQ keep churning and small caps keep sprinting, we could have that double test coming up. So you can see that market breadth for most of the week was pretty strong, and I'm attributing that to the strength in IWM and the small caps. So market breadth is looking really good, and let's see if we can get to overbought at the by the end of the next week. The percentage of stocks trading above their 200-day moving averages is also looking pretty good. It now finally is above this red line, this red trend line, but it's not yet created a higher high. So it's technically still in a downtrend, but this is what we expect. There was a lot of damage done back in April. A lot of stocks fell well below their 200-day moving averages. So the healing process on the longer term is going to take some time, not to mention the major indices are all below the 200-day moving averages as well. So we wouldn't expect huge movements in this one. Sorry, in what I call AT200 above the 200. Okay, let's take a look at a bunch of individual stocks. And I'm going to go through this really quickly again, because it was earnings week. There's so many interesting stories to talk about. But you can see here, let me move this over there. Uh, there's a double top that's in play. I did a quick short on Palantir. Overall, let's just remind ourselves just how strong this stock has been. So yes, this double top is bearish, and the double top is here with the all-time high in February. And look at how perfectly Palantir tapped its all-time high. I mean, it just stopped like pennies short right before earnings. So the buyers stepped right in after this. What was this? A 12% post earnings drop. And look at this, buyers stepped right in. So who knows how long this double top will last. But I'm keeping my eye on it because a breakout above this could set up the next big run in Palantir. And again, remember, this 200-day moving average wasn't even tested during the tariff trauma. So that tells you how strong the stock is. Gold is another big one. So this is the Spider Gold Trust, or GLD. You can see I put in a bearish engulfing top. I mentioned this before, and sure enough, gold has not been able to break above this. Even at the burst, what was this, Monday? Sorry, Tuesday, gold surged, but look at that. I mean, I love how these technicals just work out so magically. It stopped right at its all-time high before the sellers decided to take profits again. So this is a big red flag for gold, even though the uptrend is still strong. Let me scale back to remind us. I mean, look at this. I mean, it almost looks like Palantir in terms of how strong the trend has been, right? Okay. And oh, by the way, I got back into gold last week, the previous week, took profits this week. So I'm kind of in all trading mode right now since I don't have a core position anymore. This is Gilead Sciences. I took interest in this just because there are a lot of healthcare headlines this week with new people in the administration who are causing a lot of churn for folks in pharmaceuticals and other healthcare related areas. Gilead, let's actually again just look where we've been. Gilead made a nice big comeback since hitting this big low last year. I missed most of this run. I'm a big fan of Gilead, but let's see if I get a buying opportunity here at 200-day moving average support. That's what I'm looking forward to buy. DoorDash actually had a negative earnings day. That hasn't had one in a long time, I think. It fell off of, it's almost like Palantir. It fell about 7.4% right before earnings. It didn't hit the all-time high, but it stopped just short of it. But unlike Palantir, the sellers followed through the next day for another 7.7% loss. So DoorDash is one of those few stocks that had a nice bullish breakout above the 50-day moving average, but is now back below it. So I'm looking to buy it if it closes above the 50-day moving average again, assuming that it's going to make a run to completely reverse its post-earnings losses, or I might consider it at the 200-day moving average. Again, look at how, look at the poetry that exists in technicals. Look at how DoorDash perfectly, picture perfect, tested that support right there. And this was this is on April 7th. I think there were still tariff headlines back then, right? Yeah, because of Chinese retaliation. And then, so while I'm talking about the poetry of technicals, and then when the White House paused tariffs, DoorDash soared 13.8%. But look at that, it stopped just short of 50-day moving average, and it took 50-day moving average resistance, and it took about almost 2 weeks before it could finally get enough buying power to break through that resistance. Reddit, I forgot to check it out this week, but it softly fell back post earnings. It's back into bearish mode. Notice that it never quite closed above its 50-day moving average resistance. So there, I'm putting a red flag on Reddit. I'm not interested in shorting it just because at any moment this is a stock that can just soar like crazy. Look at this when the tariff pause happened. I mean, Reddit soared 24.7%. Absolutely incredible. But if it breaks out above this converged resistance at the 50-day moving average and 200-day moving average, I'm going to be a buyer. Um, it would be in what I would call open air territory, which is once it's above all of these nice significant moving averages, it could have another run to the all-time high. I do not want to miss the potential for those gains. So again, if it breaks out into this area, so that would be above 119, I am likely to be a buyer. So I'm going to keep an eye on that. IBB kind of summarizes the negative healthcare headlines. Like I said, I won't go through the details, but there were our new Surgeon General and I think someone in the FDA and maybe a third appointment all caused a lot of heartburn for folks in this industry. IBB fell 5.8% and it ended the week on a weak note with another 2.1% loss. Notice how again, here's the poetry and technicals. It failed right at 50-day moving average resistance, and now looks like it might even test the previous lows at this rate. So I am staying out of this sector until technicals improve. I was surprised to see Toast soar post earnings by 11.4%. I didn't have a chance to read any of the summaries or anything before this, but you can see it's in very bullish position with the breakout and confirmation of 50-day moving average support. It's overextended, being it's above the its Bollinger Band, which describes, the three sigma. Sorry, the I think this is two sigma of price action. That's a standard deviation term. So anyway, the way to think about this is that you expect most price action to stay within this, and that moves above or below will cannot or usually not sustain. So I'm expecting Toast to pull back. And at that point, I might consider buying it if it maybe covers about halfway, retraces 50% of its post earnings gains. So that's on the menu, so to speak. Sorry for the pun. But anyway, like I said, I'm surprised it jumped like this because there have been so much weakness in restaurants and casual dining names. So I can't wait to read some more on these earnings. The ETF for Mexico stocks, iShares MSCI Mexico ETF, has been strong and stayed strong since the lows of the tariff drama. Um, I put an arrow here back when it confirmed its 200-day moving average breakout and the seventh month high. I need to reset this because now it's even higher, and it's almost at a wow 11th month high. I'm looking back to the left-hand side here. So anyway, I was in this. I took profits. I got impatient. I just didn't like having to be on the edge of my seat, wondering whether the latest tariff headlines would send EWW plunging. So I just took profits, and I'm just watching this as an indicator as one of many indicators on tariff sentiment. The K-Web, I do have a few puts. You can see it's struggling at 50-day moving average resistance. This was a purely technical play on my part. K-Web is the Crane Shares CSI China Internet ETF. It's full of stocks like Baidu, Baba, and Pinduoduo, and some others, I think. Well, it's a bunch of others. Anyway, you can see it also closed the week on a weak note. So we'll see what happens with negotiations this weekend. No one's expecting much, but we'll see. If my puts play out, I'm looking for K-Web to come at least down to retest the 200-day moving average. All right, CME. This is one of my favorite stocks that I'm holding. I've been holding it for a long time, based on a thesis that they would benefit from increased volatility in the markets. And of course, this year has brought that volatility, and CME, as I would have hoped, has definitely benefited. It's trading at all-time highs. Let me just peel back to show you that it hasn't always been so strong. I had to wait through a lot of choppiness, but it's been very strong ever since the lows of last year. And I expect it to continue to be strong as long as we've got volatility in both the bond market and stock market because of some of these tariff headlines and economic chaos. Netflix had a brief moment of drop of weakness when the White House announced the potential for 100% tariffs for national security reasons on not foreign films, but films made overseas that are shown here or made available for distribution and seeing here. So again, this is a demonstration of how blasé tariff sentiment is. I think Netflix was down 5% in that pre-market. It closed with just a 2% loss, and then buyers just proceeded to push Netflix right back to its all-time high before these last 2 days of minor weakness. I went ahead and just got a calendar put spread just in case this turned into something, but it looks like it's going to be nothing. So that calendar put spread is a hedge that's not going to trigger. Zoom is back in play. I bought Zoom Communications when it broke out above the 50-day moving average. So far, so good. You can see it's been marching steadily higher. It's now outperforming it outperformed the major indices this week. This is the one I keep coming to on the technicals. You can see all of these lines I drew back here. I've done a bunch of videos. I've written about Zoom. This time looks like another one of those times that Zoom has attracted someone's interest. So I'm just going to ride this as far as I can. I'm hoping that it can just break out above this, what's now a double top, which, this was a shooting star top back in November of last year. And this 50-day moving average breakout turned out to be false. It was never confirmed. So now we have confirmed breakout, and that Zoom Communications, ticker symbol ZM, is now above all of its significant moving averages. So it can't be more bullish than this in terms of the technicals. The only thing more bullish would be an actual overall uptrend. If I pull back, you can see, sorry for all the scribbles, Zoom is anything but in an uptrend. In fact, it is struggling just to get any kind of momentum off of this complete collapse from the pandemic related bubble. So, I don't think Zoom will ever get back to those levels, but it is a good training stock on the technicals. Another big news item were airlines. I'm just going to use JETS, which is the US Global JETS ETF, as an indicator of that. You can see, like the major indices, it's trapped between its 50-day moving average support and 200-day moving average resistance. Some of JETS really soared. Oh, sorry for the pun. 3.3% on Thursday. I think the news was that the FAA was going to get some new equipment and new funding, or at least they're making that request from Congress, and that it'll make flying much safer. I think that was the news, but I'm surprised again that the jets and the airlines are doing so well, given air travel has to be coming down because of these tariff reasons and bad geopolitical relations with the U.S. Okay, we're coming down towards the end. Best Buy. This was interesting because it's testing 50-day moving average resistance. Ticker symbol is BBY. It's bearish as if it closes one more, if it has one more lower close. I'm not sure that I'm interested in shorting it because this is definitely one of those stocks that can just soar like crazy on a positive tariff headline. So I'm just kind of watching it. You can also see the 20-day moving average. This dotted line is now pointed up. So the burden on sellers is increasing even with its failure to break out above resistance there. Okay, Yelp. I took profits in Yelp today. It had a great post-earnings pop. I think it got as high as 12% up. I have been sitting in this one, buying on it during this churn. And, I'm really a big fan of Yelp, but as you can see, as I peel back, I mean, Yelp has essentially gone nowhere for at least 8 years. So it's only a stock that you buy when it comes down towards the bottom of that trading range and then sell on pops. And that's what I did today. And I will be a buyer again if it comes down. And as full disclosure, I'm a what's called a Yelp elite, and I'm enjoying the benefits of it. Okay, last on the list is ITB, which is the iShares US Home Construction ETF. It too is struggling with 50-day moving average resistance. I write a lot about the US housing market. You can check it out at drduru.com/122, which is where I write in much more detail about the stock market. And I'm actually watching this one because I think it actually finally is poised for a breakout. You can see the 20-day moving average is now finally pointing upwards again. And so it's going to be banging on this resistance. And if it bangs on that resistance, I will buy more ITB. I'm already a holder. This was just my standard trade for the seasonal trade. Again, I write about that on my blog. And this was pretty much one of the worst years for the seasonal trade, maybe ever. But if it breaks out above this resistance, I have to be a buyer just on the technicals. Okay, well, that's it for today. Again, as a review, I'm going back to the S&P 500. Remember, we have this cliffhanger now, whereas this tease is happening now with the S&P 500 just sort of churning around and in this no man's zone between 50-day moving average support and 200-day moving average resistance. Which way will the traders vote? Let's keep an eye out. We have big headlines coming up with inflation and trade and the Fed and all sorts of goodness. All right. Thanks for checking this out. Again, like and share this content. If you have questions, put them down below. Subscribe, hit the bell for a notification on the next edition. Take care and be careful out there.